Leader Summit in 12 years is set. House Democrats try workarounds on debt ceiling. Hong Kong cuts number of directly elected council seats. Hollywood writers on strike. I'm Ed Baxter with Global News.
Arsenal regains the top spot in the Premier League with a win over Chelsea. I'm Dan Schwartzman. I'll have that story and more coming up in Bloomberg Sports.
That's all straight ahead on Bloomberg Daybreak Asia. On Bloomberg 1130 New York. Bloomberg 99.1 Washington, D.C. Bloomberg 106.1 Boston. Bloomberg 960 San Francisco. Sirius XM 119. And around the world on BloombergRadio.com and via the Bloomberg Business app.
Hi, everybody. Just a minute after 6 o'clock in the morning here in Hong Kong. I'm Brian Curtis, along with Rashad Salamat and Doug Grisner looking at the markets. Doug, another surprising day on Wall Street.
Boy, you've got that right. A sell-off in U.S. regional banks seemed to fuel a lot of anxiety about financial stability. Yesterday, we were talking about the rescue of First Republic Bank by J.P. Morgan that really didn't do much to quell fear over those poor balance sheets in some cases for those regional lenders. We had a decline in the equity market, a rally in treasuries, and that in turn forced yields lower across the curve. Now, beyond the flight to safety, some other factors did help to push yields down. We had core inflation in the Eurozone easing, and data here in the U.S. on the labor market was on the weak side. So we have a 2-year now down about 14 basis points. Check that. I'll call it 14 basis points at 396, and then the 10-year that was off about 14 basis points as well to 342. Then if you look at the equity trade, definitely a story of risk being out of favor. The Dow was down about 1%, S&P 500 coming in by about 1.2%, NASDAQ comp down 1%, and if you look at the Russell 2000, weaker today by 2%. A lot of earnings news after the bell. We'll unpack some of the key numbers. I want to let you know that Ford did beat estimates. However, the company did reiterate a very cautious outlook for the year ahead, and the results from China in terms of first quarter adjusted EPS, those numbers, Brian, were above estimates.
Yeah. All right, let's take a look at some of the top stories. PacWest and Western Alliance leading a big sell-off in regional lenders, as we heard from Doug there. Trading in both firms triggered multiple volatility halts. PacWest shares were down 28% to a record low, while Western Alliance tumbled 15%. This renewed fears over the health of the financial system following the failure of First Republic Bank. Here's Bloomberg's Max Reyes.
If you're a bank investor and you're thinking about the profitability of these banks or the kind of runway, right, the picture has not improved for you. And if anything, given you haven't seen a systemic sort of intervention on the part of the FDIC, you haven't seen them raise insurance levels for deposits, you haven't seen any kind of backstop beyond the Fed liquidity facility, you could be concerned.
The turmoil comes a day after J.P. Morgan CEO Jamie Dimon said the current banking crisis was nearing its end. However, Dimon did acknowledge that it's possible we'd see another small lender fail. The regional bank gauge is already down 28% so far this year.
Well, the rout in those regional banks only deepened the sense of uneasiness today as the Fed considers its next move. Tomorrow we'll have a decision from the Fed, 2 p.m. Wall Street time. Bloomberg's Michael McKee has a preview.
Investors are convinced the Fed will raise rates once more by a quarter percentage point. But after that one, they're done. They will signal rates are high enough and need to stay there for at least the rest of the year to ensure that inflation continues to slow. The onus for convincing Wall Street they will follow through will fall on Chairman Jay Powell. Markets are pricing in 2 rate cuts by the end of 2023. Powell will also get questions about the status of the banking system and regulatory reforms the central bank needs to make, and, no doubt, about the debt ceiling, although that's an issue he's likely to dodge for the time being. Michael McKee, Bloomberg Daybreak Asia.
And separately today, a group of U.S. lawmakers wrote to Fed Chair Jay Powell and urged him to pause those rate hikes. Speaking here of senators that include Elizabeth Warren and Bernie Sanders, they say recent bank failures, along with the impact of those prior rate hikes, have left the U.S. economy more vulnerable to an overreaction by the Fed. Right?
Well, Doug, Icon Enterprises has seen its stock drop the most on record after being targeted by a short seller. We hear more from Bloomberg's Joanne Wong.
Icahn Enterprises plummeted 20% after Hindenburg Research disclosed a short call against the investment firm. Hindenburg said it found evidence of inflated valuations for some of Icahn's assets and thus that the stock was overpriced. Icahn rejected the claims. It said the Hindenburg report was solely to generate profits on a short position. The one-day losses for Icahn stand out among those gained for Hindenburg's recent bets against Adani Group and Block. In Hong Kong, I'm Joanne Wong, Bloomberg Daybreak Asia.
After the bell here in the U.S., Starbucks gave a positive earnings report. It's thanks to strong demand in the U.S. and China. More from Bloomberg's Tom Busby.
Starbucks easily topping earnings and sales estimates for last quarter, a positive sign that consumers are willing to spend money on discretionary items like coffee, even though stubbornly high inflation keeps pushing prices higher. Now, globally, comp sales rose 11% last quarter, well above the forecast of a 7.3% gain. And that was in large part due to a 3% increase in sales in China after some pandemic-related lockdowns were lifted. The coffee giant had expected to see a decline in comparable sales there. Tom Busby, Bloomberg Daybreak Asia.
And then on the call with analysts, Starbucks said the coffee chain is reaffirming its guidance for the full year, and the company also indicating it's out of stock on more items than it would like to be. Stock right now is weaker by nearly 4% in the late U.S. session.
Advanced Micro Devices giving a lackluster sales forecast for the current quarter as it struggles to bounce back from a severe PC slowdown. We get the story from Bloomberg's Charlie Pellet.
AMD is the second largest maker of computer processors. It said second quarter revenue will be $5.3 billion, plus or minus $300 million. Now that compares with an average analyst prediction of $5.51 billion. Its gross margin, the percentage of sales remaining after deducting the cost of production, will be 50%, in line with estimates. Like larger rival Intel, AMD is navigating one of the worst ever downturns for the personal computer industry, which is suffering from a post-pandemic funk. In New York, Charlie Pellet, Bloomberg Daybreak Asia.
AMD shares down 6.3% in late trading. I'm Brian Curtis in Hong Kong alongside Rashad Salamat and Doug Krisner in New York. So, Doug, as you mentioned, the regional banks were slammed today. Part of that is kind of who's next thinking, but part of it may also be that the profitability of these banks is just looking more and more in question. And I took the broader KBW index and went back 20 years. It's flat. Tough period for any bank.
Yeah, most definitely. And then if you add into the equation this concern about poor balance sheets, there was a piece today in the New York Times by opinion columnist Peter Coy, and he was citing some academic analysis that was done initially in March and revised recently. It looks at 4,800 U.S. banks, and the latest figures show unrealized losses. This is just beyond the regionals. Unrealized losses for those banks right now close to $1.6 trillion as a result of the move up that we have seen or did see earlier this year in yields. We know now that yields have been moving in the opposite direction, but obviously these banks are still exposed.
Yeah, just imagine, going back 8 months, you probably would have thought, well, we're going to get, real expansion in the net interest margins for these banks because the Fed's heading up to 5% or so. It has done that. The rates have gone up. And still, look at the situation that these banks find themselves in. It's one thing to say J.P. Morgan has done fine and the big banks are fine, but the broad swath of the banking sector very much in trouble. And it really does point some attention to the Fed. You wonder whether or not Jerome Powell will be seen as Arthur Burns or as Jean-Claude Trichet hiking at the most inappropriate time. I know you're going to go to Australia. I just want to mention, I heard the comments that were made on the show previous to this. Just wanted to remind the audience that even though the RBA did surprise, it's behind the Fed and New Zealand and other banks in terms of, the real meat of what it's done. It's raised rates by 3 3/4 percentage points compared to 4 3/4 in the U.S. and 5 in New Zealand.
Well, that is true, but you've got to look at the impact of where inflation is in Australia versus where we have seen inflation in some of the other developed markets. Beyond that, Bloomberg Intelligence is saying that this is going to increase the likelihood that the RBA will succeed in kind of conquering high inflation, but it does risk a much deeper economic downturn down under.
Yeah, it seems that inflation is even higher in Australia than it is in the U.S. All right, now it's time for global news. Let's get right over to Ed Baxter in the 960 newsroom in San Francisco. He's tracking some of the top stories of the hour. Eduardo.
All right, thank you very much, Brian. Leaders from Japan, South Korea set to hold their first formal summit in 12 years. A formal announcement today says it'll be a two-day meeting in Seoul to begin on Sunday. The announcement says it's a chance for Japan's Prime Minister Fumio Kishida and South Korean President Yoon Suk-yeol to restore shuttle diplomacy. The statement says the international climate is changing. There is a need for unity against China and North Korean threats. U.S. House Democrats are putting together a workaround to try and pass a debt ceiling rise without the spending cuts tied in. They're courting some moderate Republicans and would only need 5, but Bloomberg's Jack Fitzpatrick says there are a number of things being floated.
The discharge petition to get things moving in the House is there, but it looks pretty unlikely unless a bunch of moderate Republicans change their stance. Short-term measure is something people keep mentioning, but Senator Schumer just said today he doesn't want something a few months. He wants a 2-year deal.
Jack says a May 9 meeting will show who has leverage, and right now there's almost a sense of desperation, he says, on the Hill. Hong Kong plans to slash the number of directly elected seats in local district councils. This is a direct effort to prevent activists from gaining power. The proposal would see the city hold direct elections for just 20% of Hong Kong's district council seats. Hollywood writers are on strike for the first time in 15 years. They're striking for higher pay amid rapid changes in the way people watch TV and film. There is more streaming.
There's less writers working on a show. There's less seasons typically made. All of that means less money to the writers. Residuals.
And Bloomberg's Felix Gillette is saying there's concern about AI taking jobs as well.
The issue is they don't want residuals going to people who created, generative AI to create scripts, and they want some, control about how that technology is being employed in the writer's room.
First thing we will notice is the late-night broadcast shows will begin airing reruns tonight. Speaking of AI, co-founder of Apple, Steve Wozniak, is one of the signatories now of a scientific petition to slow the development of AI. Not so much afraid of a societal takeover, but because of new ways to spam, hack, and destroy lives by bad guys who can replicate everything, including your family's voices. He looks at it in a very interesting way.
Okay, technology, AI is going to take care of me, so I will have all my food and all my clothing and all my shelter and my kids and my family and a lot of entertainment, and I'll just be like a family pet, totally taken care of. Sounds like a good thing. So if I'm going to be a pet someday, I thought about it. How do I want to be treated? So that's when I started feeding my dogs filet steaks and rotisserie chicken and stuff.
Wozniak on Bloomberg Technology says advances cannot be stopped, but responsible people need to be watching. Global news powered by more than 2,700 journalists and analysts in over 120 countries in San Francisco. I'm Ed Baxter, and this is Bloomberg.
Hey, thanks very much. I'm Brian Curtis here in Hong Kong, along with Rashad Salamat, and our guest is Peter Cheer, head of macro strategy at Academy Securities, and never fails to add some pearls of wisdom to the program. Peter, great to have you with us. So, it's kind of hard to argue that that Silicon Valley Bank was a one-off, and Signature Bank was a one-off, and down the line to this week. There's something going on there, and investors are probably right to assume that it's more likely it continues than goes the other direction, right?
Yeah, it's definitely a little concerning. Late last week, I felt that it was a slight positive that we had First Republic stock going down, and KRE was actually the regional bank ETF was doing fine. And all of a sudden this morning, that really started reversing. And as I think you mentioned earlier, people are starting to look for who is the next candidate. And that's unfortunate. I think there's two issues facing the banks. One, what are they going to have to pay on deposits to keep deposits? So I think that's a margin and equity story. But clearly more people are starting to dig through balance sheets and trying to figure out which balance sheets are in trouble and how does that go from there.
Yeah, the thing is, there's also on the other side of the coin a degree of complacency.
Well, certainly, the Fed seems set to hike rates again. The Fed doesn't seem to want to take any responsibility that the rapid rise in rates caused some of these balance sheet issues where maybe they could have been slower, they could have done something bigger up front and let rates not get as high. So yeah, there's a bit of complacency, and I think now that's creeping in, and that is the worry, right, is if it wasn't one-off and each lay comes down, I think a lot of people are also a little bit concerned the amount of support J.P. Morgan felt it needed from the Fed in terms of the balance sheet of First Republic. Maybe that's what triggers some eyes, you know, and saying, well, J.P. Morgan's taking this balance sheet over, thinks they need that much support from the Fed. What's really wrong? What's going on out there?
Under the hood, investors are probably more nervous than what the indexes read. And we talk about the price action and looking at equities, and maybe that, you know, kind of prompts questions like complacency. But if you're not a leader in an industry, you know, you've taken it on the chin. And if you've reported earnings that, you know, missed anywhere along the line, especially on the forecast, you've been hit pretty hard. Witness AMD after hours here. Is that the scenario we're in, that only the biggest and strongest will collect the flows? And, you know, because these big tech companies have fortress balance sheets, that it props up the indexes when they aren't so healthy?
So part of that, I find it very healthy that this time around, it's not just the short, the highest short interest stocks leading the way. So last year, every time we had a strong rally, it really felt extremely like short covering, right? No one was really paying attention to earnings. No one was paying attention. It was, I need to buy everything. So everything shot up at once. And this time, breadth is not very good. So I think we are poised to see some sort of reversal where some of the leaders start maybe flagging a little bit, and people start buying some of these underperformers who maybe have a good story. Right now, we're not through that. I think we got to make it through earnings to see something like that occur. You know, we've had this huge discrepancy between the NASDAQ 100 or QQQ on the ETF side of things